Today I'm going to be revealing the best Solana DeFi passive income strategy. Let's dive right in. So with that being said, I want to take a look at Solana on DeFi Llama. DeFi Llama is a tool that you can use to analyze many aspects of DeFi, including the overall TVL of specific networks, but also platforms. Currently, Solana has a TVL of $4.7 billion. For reference, back in DeFi summer, it had a peak TVL of roughly $9.9 billion. That was its peak. And more recently, ever since Solana DeFi started blowing up, it was sitting at just shy of roughly $5.5 billion. So nonetheless, Solana Network has definitely made some moves this bull run, and Solana token has even hit all-time highs this bull run. Taking a look at the current Solana price, it's $143. If we look at its price all-time high, it was just shy of $260. But what a lot of people fail to realize is that Solana's market cap has been sitting at all-time highs, meaning that Solana token has been valued at more recently, as opposed to back in November 2021. Back in November 2021, it was shy of $80 billion market cap, and more recently it hit a $90 billion market cap late March of this year. Anyways, this tells me that there's a lot of room for the Solana network to grow, because if you look at DeFi over on Solana, when Solana had an $80 billion market cap, it had roughly $10 billion in TVL. Whereas right now, Solana has $4.7 billion of TVL, but it has a market cap of $70 billion nearly, and at one point in time, peaking at roughly $90 billion, which is why I'm very bullish on Solana DeFi, and I plan to move some of my positions over to the Solana network very soon. If you guys didn't know, I was in the Solana network at the start of this year. I did really well. I made literally a 3x return on a single DeFi position from fees, but also price appreciation. The thing is, then it started to get to a point where I wasn't able to withdraw capital because the Solana network had so much congestion because there were so many people using it. But to my knowledge, that has cooled down, and they have implemented some changes to help out with aspects like that. And other decentralized exchanges like Radium and Orca have further optimized their smart contracts to make sure that that doesn't happen again. And while we're on the topic of decentralized exchanges, today we are going to be using Metrics Finance to look on Orca and Radium for the top liquidity positions, and I mean concentrated liquidity. And the reason why is because that's where you're going to get the good returns. Granted, there are some more advanced strategies that we can run where we're essentially doing, say, SOL to USDC, getting a really good APR, and then hedging out the USDC aspect, so that way we have full exposure to SOL. That's something more advanced that I'm not going to be covering in today's video, but there are strategies out there like that. But now that I've selected Orca and Radium on Metrics Finance, and by the way, I am going to be using a decent amount of pro features on Metrics Finance today, but we are offering a free trial for pro users. All you have to do is go to the subscription page, and you'll get a 5-day free trial. That'll allow you to kind of get a feel for it, and if you don't like it, just cancel the subscription. I truly do not care. I am the founder of this tool. But taking a look over here, when it comes to the pools, this is where I will enter assets that I want to include in the pool. So the first asset that I'm going to include is SOL. I don't want to be deploying into any other pools that don't have SOL in them. So it's either SOL USDC or it's SOL Bitcoin, SOL Ethereum, stuff like that basically. So under the include section, I will type in Bitcoin, Ethereum, Render, Pyth, and just other assets that I believe in. So just like that, by typing in these different assets, having must include set to SOL, it will show pools that have SOL in it at the very least. And then I have my other assets down here, which will include pools that have SOL and one of these assets in it basically. So we got 28 different pools to sort through. This will be fairly easy. I don't really have to do any other filters either, but I'm going to start by sorting by the fee APR. And off the bat, you'll notice that there is USDC SOL Llama basically. And this is not one that I'm going to be deploying into. It's a low TVL pool at $100,000, and it has some absurd APR, which most likely isn't accurate. It's just a meme coin basically. But I do see stuff like SOL to USDT over on Radium. This has a TVL of $650,000, doing an APR of roughly 297%. There's also another one right over here doing an APR of 260%. I'm going to bookmark just one of these. And the reason why is because I can use a tool on Metrics Finance later to make sure that I have the best opportunity. But then I'm going to keep on going down the list. We have Pyth to SOL. I'm going to bookmark that. And I could keep on going down this list and finding assets that I believe in. So we have Render to SOL doing a 75% APR. That's pretty solid. We have Bitcoin to SOL doing a 50% APR. I actually have a lot of people in my legacy community that are running Bitcoin to SOL positions, and they're doing roughly 50 to 70% APR depending on their range. And it's been very consistent considering that Bitcoin and SOL have been correlated. So this would definitely be one that I would want to include in my portfolio if I were to diversify further into the Solana network. And then looking over at page 3, we're just going to have a couple more positions. I see Ethereum to SOL doing roughly a 32% APR. It's also doing about a 32% APR over on the Ethereum network, so nothing too crazy there. But now that we've selected about 5 different pools, we can dive into the returns that these are doing. First thing I'm going to do is open up the SOL to USDT one over on Radium, because remember, I need to go in, I need to find my range and do all that good stuff. Now, at the moment, there isn't really any automation tools like Apture Finance that we can use, although they are being worked on. Apture Finance is planning on deploying on the Solana network Q1 or Q2 of next year. But for now, there's tools like Camino Finance, which have some form of automation under the liquidity section where you can basically create your own vault. And then also Hawksite, which also has some form of automation where you can essentially execute somewhat like Apture functions, but in my opinion, it's not nearly as good as Aperture, and there's nothing like Aperture, truly like Aperture, on the Solana network quite yet. So there's definitely a product that needs to be made there. Anyways, when it comes to my range for this liquidity pool, I do think that Solana is going to see some highs, but I'm not sure if they're going to be past this $160 it recently set. So I'm going to set my range to something like $175, give myself a little bit of a buffer room. And then as far as my min price goes, we recently bottomed out at roughly 114 or so. I'm going to put my min price at 120. That's going to allow me to capture roughly 53% SOL, 48% USDT. If I want to take a little bit more of a bullish approach, I can put that max price at 180, put that min price at 125. So that way I can wait more towards SOL, which is about 60%. I always assume a $10,000 deposit amount. This is showing a 500% APR. Remember, we need to make sure that this is accurate, so we need to take some precautionary measures. The first thing that I like to do is look at the volume history, see how consistent it is. More recently, the past 14 days, this volume has been going down. I'm going to use the past 3 days of volume because I think that's going to help us out. Now, keep in mind, this is weekend volume because it's currently Monday, but that's a 235% APR strictly on weekend volume. If we were to zoom out, look at the past 30 days, you can see weekend volume, and then it goes back up, weekend volume, and then we're expecting it to go back up, so on and so forth, basically. So let's just use 3 days. And then as far as our liquidity distribution goes, we want to set it to a point where there is more liquidity, and that seems to be over here. This is the peak amount of liquidity in the range. That's the price of 148. Currently the price is roughly 143. When we are over there where there is more liquidity, we're going to be doing an 80% APR. So if we were to deploy into this pool, we want to make sure that we're happy with an 80% APR. I personally think 80% APR is pretty solid for SOL to USDT, especially considering that as soon as we hop in this, as long as we don't go right to 148, or the people that have their liquidity on 148 bring their liquidity over to current prices, we will be doing a really good return of over 200%. Anyways, I'm going to pull up the simulate page yet again and just go over to pair, and then under the pair section, I am going to type in this same exact pool, SOL to USDT, and select Orca and Radium. Now we see all the SOL to USDT pairs. We have Orca over here doing 80%, the Radium doing roughly 230, and then another Radium doing roughly 170. If I just hit this little similar assets button, it will not just show me SOL to USDT, but it will also show me SOL to USDC and other derivatives of USD or other derivatives of SOL. So after we wait for that to load up, we'll see a couple different positions. Now off the bat, we get a lot of different opportunities. Obviously this Radium is still top of the line in my opinion, 230%. Probably going to be the one that we go with unless we can find a better return that looks more consistent. I do see SOL to USDC over here doing 200%. It would be worth it to take a look at this position and essentially just fill in the same parameters to see kind of what that will look like in terms of liquidity distribution. And to take a look at this one, it actually has a similar liquidity distribution over to the one that we initially looked at, the SOL to USDT. This time the majority of the TVL is at 146. So if we were to put our price over there or something like that, we're doing roughly 85% APR over there, but there's periods where there's more liquidity compared to over here. There's just that one price point where it's a huge jump. I would honestly be happy deploying into this one right here, SOL to USDT on Radium on the 0.01% tier. So I'll just save it to my portfolio. Now in just a sec, I'm going to go through and do this exact same process for stuff like Pyth SOL, Rendered SOL, Wrap Bitcoin SOL, ETH SOL. And I'm going to try to construct a blue chip portfolio for Solana DeFi and find the best performing assets on the Solana network that are going to rise as the Solana DeFi TVL grows. Now some of these strategies that I'm going to reveal came straight from the AMAs that I did with the people over on the Solana network, including Radium. We brought them on for a private AMA. We brought Orca on for a private AMA. We brought Hawkside on for a private AMA, that yield optimizer, as well as we were able to bring on Camino Finance as well, the other platform that you can use for somewhat automated features. But keep in mind, those were private AMAs to our DeFi legacy members. And typically we have about 15 to 20 people show up to those AMAs, and the goal is to keep it private. That way you can really dive into the woods, learn the best strategies, and also the team members can reveal good strategies that we can use without diluting the overall TVL. But part of our DeFi legacy community is helping you build and scale your DeFi portfolio through our 5-phase program that has been proven by myself over the past 3 years to work. I've personally made hundreds of thousands of dollars, if not over $1 million from the decentralized finance industry by now. And if you guys are ready to take advantage of my expertise and learn more about our DeFi legacy program, I'm going to leave a link down below, which will have a 20-minute video on it. Take a look, and if you truly want to work with me after that, make sure to hit that apply now button. I personally haven't seen anybody else in the industry that is bringing on billion-dollar DeFi projects on a monthly basis at this point. But let's dive back into Metrics Finance and essentially start to find the next position. It's Pyth SOL. Now, Pyth SOL liquidity distribution looks a lot more healthy in my personal opinion, and one thing you'll notice is the correlation of this pair is 0.93. That means that these assets are very closely correlated, so they move together essentially. Now, when the price is going up, that's telling us that it's taking more Pyth to equal 1 SOL, which means that SOL is outperforming Pyth basically. But when it's going down, that means that Pyth is doing better. I personally think that Pyth is going to do very well this bull run, so I'm going to put my min price at 380 and I'm going to put my max price at 590. That's going to give me about 60% Pyth, and yet again I'm going to put my deposit amount at $10,000. It's 111% 11% APR right there. Now, if we look at the volume history, that's where we need to zone in on the past 4 days, basically. It's a 35% APR. It's not too good. We could go over to pair and essentially look to see if there's any other Pyth Sol pools, but in this instance, I know that there's not many. So I'm going to scratch Pyth off the list and move on into rendered Sol. Yet again, I'm going to put my deposit amount at $10,000. And then as far as my range goes, I'm going to do basically 37.2 to roughly 25. And that's going to give me about 60% render because that's the asset I'm more bullish on. But we have to take a look at the overall trend. Over the past 30 days, price has been going up. Render hasn't been doing as good as Sol. We zoom out the past 90 days, you can see it's continuing that trend. Past 180 days, once again, continuing that trend. So it's probably worth it to actually have a larger max price. Yes, we probably know that render is going to do better than Sol this bull run, but at the same time, it's not showing that trend right now. So maybe allocating 50-50 would be a good idea. Doing 25 to 38 would get us to 53% render, 47% Sol. I think that's pretty solid. We're staying in range for the most part. This is a 0.75 correlation, so that's pretty solid as well. We're gonna go ahead and use that 3-day calculation range, and we are doing a 40% APR. Not too good, but if we were to pick up in volume, we could be doing roughly a 50-60% APR. So let's just assume that we were to pick up in volume, and we can always reallocate later on. And then wrap Bitcoin to Sol, we're gonna execute the same process. Once again, this one is gonna be at $10,000, and as far as my max price goes, I'm gonna put that at roughly 465. And the reason why I'm doing so tight is because it has a correlation of 0.92. So we can reasonably go with a tighter range because we know that we're going to stay in range for a longer period of time. So 355 to 465 is going to get us roughly a 95% APR. But remember, let's go down to the past 4 days of data. That's doing roughly a 55% APR. Still pretty solid, but this is definitely worth pulling up over on the pair page because there might be a better return for wrap Bitcoin Sol. Just like that, metrics will spit out the best opportunities. It looks like it's this 0.3% fee tier, which is what we have pulled up over here. I personally think that 55% APR on wrap Bitcoin Sol, very, very solid. We don't need to get too greedy here. Remember, it's about building long-term wealth. If you're here to get rich quick, this is not the industry for you, and nor is my DeFi legacy program for you. My goal is to help you build generational wealth and create passive income that you can rely on and is consistent so that way you can pay your bills with it. And that's the goal of our DeFi legacy program. So if that's you and you're an investor, make sure to check that link out. But looking at this overall portfolio, we have roughly $30,000 allocated. This is a simple diversification strategy, just 10K, 10K, and 10K. That's doing roughly $168 a day or 205% per year. Very, very good. Now remember, we need to look at short-term data that's consistent. Looking at Sol to USDT, I'm going to change that calculation range to 3. And just like that, we're now knocked down to 120% APR because we're looking at more consistent data. And we can further diversify if we want to. Like we can allocate maybe $15,000 into Sol to USDT, and then we could take like $5,000 from render. So that way we have majority of our positions allocated to Sol to USDT, and then we have some allocated to wrap Bitcoin to Sol and a little amount allocated to render Sol. Why might we want to do that? Well, that's in the instance that we think that the price of Sol is going to start to decline a little bit. And if we do think that, we are going to need to adjust our range to account for that and to basically take a more bearish approach, but that would allow us to have a portion of USDT exposure. And when the market's going down, that's good because our USDT is used to buy into Sol at lower prices. Basically, it's dollar cost averaging into Sol. And just like that, after reallocating, we still have $30,000. It's just now more is allocated to this Sol to USDT, less to Sol render, which isn't performing as good, but really we're betting on asset appreciation here. And then 10K allocated to wrap Bitcoin Sol, which is doing about 55% APR. We're making about $126 per day estimated, and that's roughly a 150% APR off of the Solana DeFi network. That is really, really good in my personal opinion. And I'm personally eager to see how this is going to perform, and I am going to end up deploying into some of these positions, and I will keep you guys updated over on my Twitter page when I do. Guys, if you enjoyed today's video, make sure to drop a like and subscribe, notifications turned on. Remember, you can get a free trial of Metrics by just going to metrics.finance and going to the pro section. You'll get a free 5-day trial. And if you are interested in my DeFi legacy program, that will be linked down below. Remember, it's for investors that are looking to establish generational wealth, create passive income, and not get rich, but rather build wealth off of your already existing cryptocurrency assets. I recommend you have at least $15,000 to deploy into your portfolio if you do plan on looking into our DeFi legacy program. I'll see you guys in the next one, and peace out.